So we're talking about all these amazing Lightning use cases, apps, whatnot. And a really great place to go to find these is the homepage of the Lightning Network, which Radar Ion released earlier this year. Yeah, so we would love to welcome to stage
Brendan Curtis, Unpopular Paths to a Billion Lightning Users.
Hello and good afternoon. There's been some awesome talks today, and I hope to continue the trend. I want to talk about some ways that we can think about bringing more people into the Lightning Network, because we're really at a critical junction right now where our top priority should be getting more users in here, getting more businesses in here. So the Lightning Network we want has a number of properties that I think we can, for the most part, agree on. There's been a lot of talk in the last 2 days about the circular Bitcoin economy. The concept there is that people will be sending and receiving payments such that things kind of balance out. We're really interested in solutions that allow total self-custody, your keys, your Bitcoin. We'd like to believe that market-based capital deployment, the growth of fee markets and those sorts of markets will enable us to deploy capital effectively so that we can have routing nodes and service providers that are persistent and sustainable on the Lightning Network. And finally, I think pretty much everyone here is on the same page that we want to be doing all of this for Bitcoin, not for all of these other altcoins. But the point I want to make is that while there is amazing work going on to try to solve some of these problems using technological means, right now we have some other things that we need to deal with. So the first is that the circular Bitcoin economy isn't a reality and may not be for quite some time. We have net flows on the Lightning Network, and we need to be able to manage those flows in a way that's not cost prohibitive. While we love self-custody, we should really be thinking about using the right security model for the job. We should be thinking about what the Lightning Network is doing for Lightning Network users. We should be open to different trust models. I'm going to talk about some opportunities that I see for trust-augmented capital efficiency, which sounds ominous, and it is a little bit, but you don't have to worry. And fourth and finally, I want to talk about opportunities to create on-ramps for holders of other digital assets to welcome more people into the Lightning Network. Okay. So first, a little bit of a disclaimer. I have 8 non-custodial Lightning nodes on my phone. So Radar Ion was our first venture into the Lightning Network earlier this spring. And it's a series of guides that focus on non-custodial onboarding to the Lightning Network. So I'm fully committed to a lot of these ideas that I've brought up here. But I hope not to advocate for any of these techniques, but really to explain why I think that economic and practical realities may make it such that some of these techniques end up being used, and also show that we don't need to be afraid of any of this stuff, that Lightning is sort of a big enough tent for everybody. So the first thing I want to talk about is really custodial Lightning. There's a whole bunch of companies represented here at this conference today that are providing custodial solutions. We have people like BottlePay, Tip&Me, OpenNode, Blue Wallet, maybe the Square Cash app will join this party at some point, and we've been talking about exchanges as well joining us here. And I'd like to argue that I think that these custodial services are going to play an important role, and really a lot of it comes down to costs. So there are a number of costs associated with engaging with the Lightning Network. Ownership of Bitcoin in a way that is enforceable on the main chain really comes down to ownership of a Bitcoin transaction output, and outputs cost money. And uptime, monitoring, and setting up Lightning nodes also costs money. And then managing liquidity, managing uptime, and all of these sorts of things cost money as well. And so I believe that there are many people that could be benefited by Bitcoin, by the utility that the Lightning Network provides, that may not always be willing or able to check all of these boxes. And so there have been some questions about the economics of hot wallet custody, but I believe that there are actually some advantages of scale with these systems where the marginal cost of potentially custodying additional assets is quite low for these services, and that they definitely have a role to play. So if we expect that many people will come into the network and make relatively small transactions, it's not really a significant issue if they have to place some trust in these service providers in order to do this. So here's another interesting concept. It's been called fractional reserve Lightning. And the basic idea here is that two routing nodes on the network may choose to allow a channel balance under certain circumstances to go negative. And so you may say, why would you ever do that? That would represent a debt from one node to another that couldn't be resolved with enforcement on-chain. So the reason why node operators might choose to allow that is because channel capitalization costs money, and liquidity management in these channels costs money as well. So if there are techniques that are available for reducing these costs, I think that we can expect that some service providers will choose to go this route. And so if you have two businesses that have some other sort of an agreement, maybe they're in the same country and they have a legal agreement of some sort, they may be able to reduce their costs and potentially increase their ROI of operating a node by actually allowing channel balances to go negative under certain circumstances. So businesses are used to being able to capitalize on their trust relationships to reduce their capital requirements, to reduce their cash flow requirements. And I expect that in the Lightning Network, we're going to see some of this play out as well. But the good news here is that the Lightning Network effectively isolates the trust between peers. So you can actually customize your trust model with each peer that you choose to open a channel with. And so what this ends up meaning practically is that if you're a user, you're sending or receiving Lightning payments, those payments succeed or they fail. And if they succeed, you don't really care how they succeeded, because as long as your channels are fully collateralized, you have absolutely nothing to worry about. And so I suspect that some implementation of this is pretty much inevitable. But again, just like with a mixture of custody models for Lightning nodes, we don't really have to worry about it because users aren't exposed to any risks that other nodes choose to enter into. So I have another one here. When I look at altcoins, a lot of people see a lot of wasted effort. I see a lot of mispriced block space. And I think that that actually represents an opportunity for the Lightning Network. So as I mentioned earlier, we have net flows in the Lightning Network. Some nodes tend to receive a lot of payments. Others choose to send for the most part. And so channels get depleted and channels fill up. And it costs node operators money to sort that out by moving Bitcoin on and off chain, by basically finding people to try to resell balance to. And all of this rebalancing results in on-chain transactions. And so I think that there's an opportunity here to mitigate some of the costs associated with managing these net flows by actually moving some of these on-chain transactions onto other chains. And the way that we could dump state into other chains is to use a technique called a submarine swap that Alex Bosworth and others have introduced and then developed extensively. And that essentially allows you to trustlessly couple a payment between a layer 2 network like the Lightning Network and really any layer 1 network that also supports hash time lock contracts. So if you saw the SparkSwap discussion earlier today, an HTLC is essentially a type of escrow. And so if a user can escrow funds on one chain such that a service provider then pays a Lightning invoice and then uses the preimage to sweep that escrow, this is an effective technique for moving some of the state required to rebalance the network onto other chains. So we've actually gone ahead and built a product called Radar Redshift that acts as a bridge to the Lightning Network. It is a multi-network submarine swap provider that allows Bitcoin and altcoins on layer 1 to trustlessly be moved into the Lightning Network as Lightning Bitcoin. And so we use this escrow mechanism to accomplish that. The way it essentially works is Redshift collects quotes from market makers that market make between Lightning Bitcoin and the other assets that we support. And then the user accepts the quote, they escrow the funds, the service provider pays the Lightning invoice and then sweeps the escrow. If something goes wrong and an invoice can't be fulfilled on the Lightning Network, then the escrow times out and the user can reclaim their funds. So it ends up being totally trustless. And I think that this represents a unique opportunity for a number of reasons. One of them, and this statistic definitely shocked me, it may surprise you as well, there are 250,000 monthly active users using the MetaMask browser extension for Ethereum. So these people not only already have digital assets, they have them at hand. And many of these users are used to interacting with these Web3 decentralized applications that have pretty similar user journeys, pretty similar UX, pretty similar flows to some of the apps that we've seen on the Lightning Network. And so I think that this is potentially a cohort that we could recruit future Lightning users out of, especially given that we could use tools like this to actually trustlessly onboard them onto the network. Questions?
Quick question about that stat. How do you know that they're human, not bots? Because it does seem like there are a lot of people using dApps, or, well, non-humans using dApps.
So MetaMask actually has telemetry built into the extension. And so they actually track their users, and they know that there are 250,000 active users. So these are just people that are interacting with the browser extension. So they're almost certainly human.
So you guys have launched this new product, various altcoins into Bitcoin. I'm curious, have you been interacting with those other communities that you're supporting to get into Bitcoin, and what has their reaction been?
So the reaction has been very positive. We've been talking to a number of different potential integration partners. So we're offering both this widget that can be dropped into any website, and we also have an API and an SDK. And the first interest was actually expressed by altcoin wallets that wanted to enable their users to make Lightning payments without needing to run any Lightning architecture. So obviously, they're going to be paying worse price. There's a spread that will be baked into the price that they're paying. But for a user that just wants to load up bottle pay or just wants to buy their first LN pizza and see what Lightning is all about, they can come in and do that very easily.
Which dollar coin is that?
That's USDC, I think. So when we
do you guys support USDC?
What's that?
You have USDC support for this?
So we will initially launch just with Bitcoin and Ether, but then adding additional Ethereum tokens is fairly straightforward. And theoretically, we can support any network or asset that supports HTLCs that are compatible with Lightning.
So this radar archive productive launch, how does that work exactly, in the sense that you're also running a service, right? So, for example, let's say I as a user want to send you on-chain Bitcoin and get paid in a Lightning channel. You're going to send me the Lightning payment, right? So you're running some kind of service. And how am I actually going to construct this actually special script on-chain Bitcoin transaction? Are you basically also, did you also create a wallet application that can sign these scripts? Because if I am using Bitcoin Core, for example, I'm not going to be able to, unless I'm hard coding raw transactions, even with PSBT support at the moment, I will not be able to sign these scripts. And if, let's say, a time lock expires, I will not be able to redeem those coins. Of course, theoretically it's possible, but in practice it's not.
Yeah, so we'll be open sourcing those components, and there's essentially a wallet that's built directly into the widget that allows the construction and verification of those scripts. So you're basically setting up this HTLC, paying into it, so that it can then be redeemed after the Lightning payment is cleared. Thank you.